What up, everybody? All right, so in this video, we're going to be talking about selling call credit spreads, all right? So I made about $1,200 doing this today. So I entered this trade this morning on Amazon, and I was able to collect about 80% of the max profit or premium on this trade in the same day on Amazon, all right? So I posted this on my Instagram and in my Discord, and a lot of people ask questions. What is a call credit spread? How do you enter it? So in this video, I'm just going to show you exactly how you sell a call credit spread and what that is. So if you looked at my previous video about what is a put credit spread, this is pretty much the opposite, okay? So when you're selling a call credit spread, I put this little document together. So selling a call credit spread is either bearish or neutral because the stock goes down in price and so will the options, all right? So pretty much you're a seller of premium here. This is what, you hear people saying, I sell premium, I only sell options. Well, this is a good strategy to use if you don't want the risk of selling naked calls, okay? So here we go. This is just an example of what it would look like. So if you're on Thinkorswim or any platform, it's going to be called a vertical trade, okay? So when you're doing spreads, another word for that is vertical. So when you enter the trade on your Thinkorswim or Robinhood or Tastyworks, it's going to say vertical when you get into two separate strikes, okay? So that's what it looks like when you get in. And for today's example, we sold the 3220 calls and we bought the 3240s. The reason you buy and sell one at the same time is to cover yourself, all right? So you lower your risk by not selling the calls naked, those 3220s, got it? So price needs to expire below 3220 for max profit. That means if you sell the spread at 10 bucks, you want it to decrease in value, right? You want the stock to go down or just stay sideways. So for max profit, if you wanted to collect the full $10, which would equal times that by 100, that would be $1,000 per contract. You would need Amazon under 3220 for max profit, okay? So again, recap, this is when you're bearish a stock or kind of neutral and you don't think it'll go above a certain price by a certain date, all right? So it's a good way to collect premium, and let me show you what I did today. So Amazon, you can see these lines I have. These are my support and resistance lines. This week it was having trouble breaking above 3241, okay? So I had this resistance. It was pretty much just on from a daily chart. You can see that the top of this channel that it's been trading in, 3240, is a key resistance level. So I didn't think Amazon was going to stay above 3240 for this week. Amazon could do whatever it wants to do next week or the week after, but for this week specifically, I was looking at the 3240 level, and we couldn't break above. So my plan yesterday was to sell some call credit spreads on Amazon if it gapped up a little bit, and that's exactly what it did. We could see pre-market, it was trading sideways, gapped up a bit, and it immediately started selling off. You could go on a smaller time frame and see it a little better. That immediately we got right back under 3241. So at that point I was like, all right, let's follow the plan and just enter these call credit spreads and see where they're at by the end of the day. All right, so pretty much what I did, here's the trade down here. This is what it looks like, right? So again, what did I say? You're buying the 3240s, selling the 3220s, and you're creating a vertical spread, and you're selling to open. So just like you would short something, you want that spread, you want the value to go down, right? So I entered the trade around $9.50 was the cost of this spread, and I got out around $3.30. I set my buy limits at $3.30, and I probably would have got the full premium had I waited until the close, but that was just my plan. I wanted to get out around 80% of what I could have got. So there you go. This is the P&L on the day, 1200. So for this trade, it was about I bought 10 of them, so it was about $2,000 to make about $2,000, but the probability of the trade was pretty high since we were unable to break 3240. So pretty much when you're selling the call credit spreads, you just need price to stay under a certain point. Now this morning when I got in, Amazon was trading at like 32.30. All right, so I got in around 9:40 a.m. and I sold this for about $9.50. Okay, so again, I want the spread to go down. I want Amazon to just go sideways or lower. In this case, Amazon actually sold off quite a bit, and yeah, that was great for our call credit spreads, because as the price of the stock Amazon decreases, so do those calls. All right, so as those decrease, I'm making a lot of money because I sold the spread. I sold the call credit spread. So we could see clearly Amazon was below where I needed it to be, below 32.20 for this example. And we could see that was a level from yesterday. That was support, which ended up giving out. So there was, quite a bit of selling today on Amazon. And also another reason why I did this is because, one, Amazon typically likes to sell off on Fridays. I don't know why. It's just a pattern I've been seeing on Amazon. So this is a good trade to do on Fridays. It was a day trade, so I was in and out the same day. And second reason is it's monthly options expiration day. So there's a lot of options contracts that expire on December 18th of this year, because these are the monthlies. These are the last contracts of the year, for the monthly expiration. So that's another thing that brings some selling, because there's a lot of contracts that expire, so people have to sell them and get out and then roll them out into future contracts if they will. But that was a couple of the reasons why, and also because it couldn't break above 32.40. So I was like, all right, let's just do a very stress-free trade and sell some premium on Amazon. And Amazon gives you some juicy premium since it's such an expensive stock. So yeah, I hope I didn't confuse you, but that is how and why I entered a call credit spread, or sold a call credit spread on Amazon today. And this is just another strategy that you guys can use. So again, to recap, Amazon was trading at 32.40 this morning, and I thought it would go lower or sideways. So what I did, instead of buying a put, I just sold a call credit spread. And for me to make money on that trade, I would just need Amazon to go sideways or a little bit lower to collect the full profit, because it expires today. If those contracts aren't, those calls aren't above 32.20 or 32.40, like the ones I got, then guess what? Those expire worthless, right? So we can make money on that, selling the premium, because guess what? 90% of options contracts expire worthless. So if you're not selling premium, you're leaving a lot of money on the table. So that's why I want to make this video for you guys. A lot of people were confused about it, and I hope I cleared it up. And here's a recap of selling a call credit spread. Again, bearish or neutral. I know I'm repeating myself, but I'm just trying to teach you. Bearish or neutral, because the stock decreases in price, and then the options will follow. You're pretty much selling premium. This is what Wall Street does. And this is just what it looks like in the platform. You can see the vertical down here. And yeah, if you did the one I did, you would need Amazon above or below 32.20 to make the full profit, all right? So even when Amazon was at 32.20, I was already up on the trade, because I got in this morning when it was a little higher. So you could sell out of the spread whenever you want. You don't have to wait till they expire. Yeah, this is when you're bearish or you don't think a stock is going to go above a certain price. So there you go. Key tip, just sell at the money call credit spreads, because the risk to reward will be like 1-to-1, which is great, and you'll be able to collect a lot of premium. Got it? So hope you enjoyed this video. If you learned a new strategy today, hit a thumbs up. If you're new, subscribe. A lot more of these free videos coming your way. And yeah, that's pretty much what you do. So you're pretty much buying a call, selling a call, you create a spread, and you sell some premium. All right, so that's how you do it. Hope you enjoyed again, and hit that thumbs up. Leave a comment if you have any questions or if I left anything out. All right, so yeah, see you guys later. Have a great weekend. Peace.